Welcome to Lock in Your Success. We are the company that creates strategies to build wealth. This webinar reviews real-time hypothetical trades each week while analyzing market conditions with adjustments. Questions are always welcomed, asked, and answered. Before we get started, we need to go over our disclosures. Locking Your Success LLC is not a broker-dealer or financial advisor. This presentation is for educational purposes only. This information is not an offer to buy, sell, or hold securities. You shall be fully responsible for any investment decision you make, and such decisions will be based solely on your evaluation of your financial circumstances, investment objectives, risk tolerance, and liquidity needs. Please visit cboe.com to find and review the options risk disclaimer prior to placing any trades. Also, please note that these are real-time but hypothetical computer-simulated trades and results. The trades are believed to be as accurately presented as possible, however, they are not guaranteed as to accuracy and therefore live results may vary. No representation is being made that any portfolio will or is likely to achieve profits or losses similar to those shown. Whew! Now that that's over, let's get to it. Here is your host, John Locke.
Good morning, everybody. Welcome to the Options Trading for Income weekly update for October 5th, 2015. One of the things I have to quickly mention is this is going to be a recording that was done after the live webinar. I forgot to press the record button on the live webinar, and therefore I don't have the recording for you. So what I'm going to do is I am going to redo the update, and we will also review some of the email questions that we got after we talk about our positions in the market and so forth. So let's get going. If you're watching this on YouTube or you're listening via podcast, come on over to our website at lockeinyoursuccess.com. That's L-O-C-K-E, inyoursuccess.com, and join our mailing list. Get your free report, The 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. While you're there, check out our trading programs. We have the super simple spread trades, the M3, the Bearish Butterfly, the Rock, the M21, and of course, APM squared, how to perform better in the markets. In this update, we're going to be covering 4 of our more popular trading systems. We have a Bearish Butterfly, an M3, a Rock, and a V Condor, which is part of the SSS trading system program. We are doing simulated real-time trades that we've been doing every week for years, and if you'd like to see some of the past webinars, come on over to our blog at lockingyoursuccess.com. Just follow your way to the blog, and you can see the recorded sessions there. So for our new and exciting news, we have the Locke Options Community Coaching. First meeting this Wednesday, 9 p.m. Eastern Daytime. If you have not signed up for that, that would be a good idea to do so. If you'd like to know how to sign up for that, let me just quickly show you our website. So if you come to lockeinyoursuccess.com and you just go under coaching, Locke Options Community Coaching, and our information is right here. Just come on down to the bottom. Normal price is at $199 a month. This month is only $99 as we're just starting out, and we're giving you a special deal. And of course, from there, every month thereafter, the monthly membership cost will be $199 a month. So this is where you would do that. If we come back to our presentation, we also have the Locke Options community itself that is currently under development. It's going to be a community forum with members-only content and information. And we're going to have a lot of members helping members, a lot of neat stuff in there. Sherry's been working on this for weeks, and we were hoping to get it together by this month, but we've been delayed. There's an awful lot of work that goes on behind it. She's doing a great job, but this thing should be up and running sometime this month. So really excited to get that going. Other exciting stuff we have is we have a winner for our Successful Options Trader of the Month. His name is Jaroslav, and he is from Australia, and I'm really hoping that I am pronouncing his name correctly. We will find out, though, because he will be doing a live question and answer session for our community members. Well, we'll talk about what he did, his experience thus far trading, and a lot of other great things. So he won doing a custom-made modified Rock trading plan on the SPY for August of 2015 expiration. Not only was this creative, but it was also profitable and ended up being a good trade. So, and it was well documented and stuff. So we'll have a lot of neat stuff to talk about. His hat will be mailed this week, and he will be entered to win free admission to one of our live events. All right, let's move on to the markets. So when we were talking last week, the Russell was way up in this range here, and I was expecting the market to come down, probably to the 1100 level and reverse. So the market did drop as expected. However, it dropped a little bit more than expected. We pushed down to the 1080 level, which wasn't a terrible surprise because if you remember back in August when this thing broke down, we immediately put a target in place of 1080, and with the harsh down move that we had immediately following that, I was actually a little bit surprised that this reversed this early, but nonetheless it did. And when we came back up, I thought it would come down, test the bottoms in reverse. Didn't do that. It came down to 1080. So is it a big surprise that that happened? No. I was hoping that it would hold the 1100 level, but it didn't, and we ended up rolling back a little bit. But either way, that's the good thing about these trades. You don't have to necessarily call the market. So where do we go from here? I'm thinking that the market or the Russell comes up to this 1160 area, and it probably does it at about this angle. Now, I realize we're well above this line at this point, but what I'm doing is I'm comparing this to the last time the market bottomed out. If you see here, the market bottomed out at around 1100. We had a hard bounce of about 60 points. The market reversed and then progressed higher. That's what I'm thinking is going to happen here also. We came down to about 1080. We should get a bounce up to the 1140 area. Hopefully pull back a little bit, run sideways, and close the month right up in this 1160 area would be my best guess. Now that said, if this market continues to rise at this level, which is really fast, it may be a rise that's similar to something like this over here, right? In which case we are going to be seeing 1190 fairly likely see 1190, 1200 into expiration. I'm not really expecting that. I'm expecting this to slow down at this downtrend line and maybe even run a little bit sideways here for a while. Again, would it be a surprise if this thing is shot up to 1190? Not really. I just don't think it's going to happen. So that's what I'm thinking for the Russell going forward, for us to level out the next couple days and then proceed a little bit higher. So let's go and take a look at how our positions did. Let's take a look at our October M3 trade first. This is how the trade was sitting as of our last update on Monday. Of course, in the morning, the market was 30 points higher, but during the day, the market pulled back down to this 1090 level, which is definitely behind our short strikes. We're also over our maximum delta range. This being the case, within the program, we're due to roll this position back. And if you move half an hour forward, you'll see we took this position at 1100. We rolled it back to 1070, I believe. Let me take a look here. We rolled it back to 1070, put in 5 1070, 1080 verticals, and now we still maintain our positive delta, which is normal for an adjustment on an M3 trade, and we're in a position that looks like this as of Monday. Of course, from there, the market just went up. Actually, no, it went down Tuesday a little bit. I apologize for that. No adjustments, though. Nothing, didn't kick anything off. We just had a 10-point drop, and this position actually looked pretty good on Tuesday. If we fast forward to Friday, by 1530, which is our adjustment point in these particular trades, we're in a situation where we were over our maximum delta. We're not over it at this point, but you got to remember between 3 and 330, the market rose about another 10 points from where it is now. So that threw us to negative delta for being at the edge of the tent. So we came in here and we did 5 1070, 1090 verticals. Put us in a position that looks like this, and that's the way we came out of the week last week. Now today the market's way up at 1132. That being the case, if the market actually holds this high, we're going to need to make some sort of an adjustment in this position for the day, and we'll take a look at that. So that's the October M3. If we take a look at the October, let me just show you the T-log here first, because I usually get comments for that, and I know during the session this was asked for. So our October M3 T-log looks like this. We had an entry day of the 21st. This has been a choppy market and a tough trade the whole way. We entered this market here. We had a very harsh down move in August on the 24th, which drew us down a lot. We had the reversal. In other words, we got whipsawed, and we had to climb back up behind the market. And then, of course, we're getting whipsawed again to the downside, and then again back to the upside. So, been really choppy. And being close to expiration can be a little bit problematic when the market's actually wiggling around this much. But that being said, we are in decent shape. So position's up a little bit, and I'm perfectly happy with the position. Not a big deal. I can tell you with live trades, if I get chopped back and forth this much, a lot of times I'll just exit and go out into the following month, like in November, and trade it out there, because movements like this isn't going to bother a November position, but it can be a little bit, they're not problematic, but just a lot of work for an October position. Let's switch over to our rock trade. So Monday afternoon, this is what our October rock position looked like. We were actually at 1110 shorts. Obviously in need of an adjustment here. If you look at where the position looks like, this is what we look like at the end of the day. So if I move forward a half an hour, you can see we took this position, we rolled it back to 1170, and we did 1070, 1080 verticals, just like we did with the M3 trade. So at this point, this trade's pretty much identical to the M3 trade, with the exception that I may have a different strike in the calls. So that's where that ended up. Again, since this is the same as the M3 trade, it didn't get any adjustments until Friday, where we did the exact same adjustment. And once this updates, you'll see this move. Oh, that's 1300. Let me go to 1530. You'll see we rolled the 5 of these 1070s up to 1090, bring our delta back down to normal, and this is where we closed out the week in the rock trade. So right now these trades, the rock and M3 trade, are virtually identical. The only difference being if we hold over 1130 today, the M3 trade goes, the M3 trade stays as an M3 trade. It may be rolled forward, but the rock trade is going to likely go into rock positioning, assuming it meets the entry test. And we're going to be probably in a, it'll have to be an 1120, 1160, 1180 rock trade, which is likely to actually work out fairly well if the market remains fairly stable into expiration. We'll wait and see. So this will be an interesting contrast in between, hey, what have I been better off this month, staying in an M3 position, or am I better off pushing into a rock position? Most of the time, you're better off pushing into the rock position and taking advantage of the theta decay if the market grinds up. We ran into this a lot in 2013. Okay, so that's that trade. We also have a October V Condor. Actually, let me show you the T-log of the rock trade first. Here we are. We started on the 16th, and here we are on the 2nd. Not too many adjustments in this particular trade. So let's take a look at the V Condor. Now the V Condor actually has had no adjustments. If you take a look at the T-log on this trade, we entered here on the 21st, and we've sat and done nothing. With the way the market happens to be moving right now, we would have been much, much better off in a regular Condor. We may have had more drawdown. I don't think this trade really drew down at all, but it didn't make any money either. A regular Condor drew down probably significantly, but ended up probably more profitable here by quite a bit. So this is one of the months where the V probably hurt us a little bit. That does happen in these trades when the market is very choppy and sideways, which is why we have an RVX limit on how on when we actually trade the trade, and we were fairly close to this limit a few times. So at this point, realistically, the condor itself is worthless. And if you wanted to, you could just close the trade, take your small profit, and move on. There's pluses and minuses to doing that. I mean, should the market sit, we are still in or have a possibility of actually losing this trade, because if you take a look at the analyzed graph, if we sit here in this position, especially if we get up into here, we could come up with a small loss here, which is very, very possible. So to mitigate that, you could just simply close the trade out now and really not worry about it. The other way you can look at it, and this happens quite often, is that, hey, we'll just stay in the trade, and who knows? In the next week or so, we could get a fairly large move in the market and be doing very, very well. So, for example, we could, we're up to 1130 today. We could bounce to 1130 today, and then the market could reverse, and by the end of next week, be down here at, say, 1055 or 1060 or something, and you could pull a $7,000 or $8,000 trade out of this. So it's a little bit of a trader's choice. Of course, we have guidelines. The guidelines are telling us to just stay in, because my preference here would be to just wait it out and see for the most part. The guidelines are eventually going to tell us to pull this V out if it stays here, but we'll have to see what happens. We'll have to see what happens with that. So this is what this position looks like. Certainly not in any trouble, but not doing extraordinarily well either. Let's take a look at what we have for November positions. And again, since we are on V Condor, let's just take a look at the November V Condor. This is what this position looks like here. We have short strikes at 990 and at 1270. And we have our straddle at 1140. If we take a look at this, no adjustments here either, but being further from expiration, our T plus 0 line is much more stable here. And if we take a look at our T log, this is what we look like here. Still really, really early in this trade, so it's hard to say how that's going to go. If we take a look at our next trade, which is going to be our November Bearish Butterfly, this position also has had no adjustments and was entered on the 25th of September. And as of Friday, this is what we look like here. So this is doing fairly well. Not going to like 20-point up move per se today, but it may scale us into 2/3 here. We will have to take a look. I highly doubt we're going to be near any delta theta ratios with this market volatility. So we're probably just going to add our second third in when the market is up in the 1140 range, assuming it gets there. So this is actually setting up, if the market does what we think it's going to do, and maybe runs to 1160 and reverses, this is setting up for a really, really beautiful bearish butterfly trade this month. We will have to wait and see if that comes to pass or not, but so far I'm liking the trade. So here's what we look like there. Let's look at our November M3, which did get an adjustment. So I'm going to back up to Monday. Here was our November M3 position as of Monday. We are behind the short strikes. Some traders do take the M3 trade and roll it back behind the short strikes. Some traders do not. Within the guidelines, it says if you have a delta problem or if you're more than 10 points under the short strikes. So that being the case, I left it. If you go to the following day on Tuesday, we did get a continued down move and we did have a delta issue. So what we ended up doing is this was our position prior to adjustment. We had 17 butterflies and one call here at 950. After adjustment, we rolled these butterflies back to 1060. We reduced our size from 17 to 12 to deal with gamma issues, and went to a position that looks like this. And there were no further adjustments on our our November M3 trade. This is how we rounded out the week. Very nice positioning. I think this fairly good sized up move today is actually going to be helpful to us, and I'm liking this. Looks like we may end up having to actually do a roll up on this if the market stays up in this range. But here we are. All right, so again, unfortunately I lost the live taping, but I did have some emailed questions. I don't recall what the live questions were, so I can't go over them again, unfortunately. But you know, the guys at the live webinar at least got them answered. So the question I have is, when adjusting a trade by rolling up a butterfly, do I generally close the lower butterfly first and then open the higher one? So let's start with that one here. This is multi-questions. It's like 6 of them at once. So if I'm going to roll a butterfly up, so for example, in this particular case, if I wanted to roll this up today, or maybe we can go live because we're going to have the market's going to be up a whole lot more now. So if we come up to live market prices, this is going to be situationally dependent. A lot of times, if we're this high up, we're going to be negative delta. If I'm negative delta, what I'm going to do to roll up, assuming I have multiple contracts on, there are ways to do this if you only have one contract on. In other words, you're doing a $5,000 position. It's a little more tricky to show you how to do it, but the concept is the same. So, and I'm not going to be able to show you a very, very small position on this update. It's just takes too time consuming. But what I can do here is, if I was positive, say I was negative delta, say I had 25 of these on, so I'm going to add another, let's say 24. So if this was my position and I'm sitting here and I'm 2 negative delta and I have to do a roll up, what I would do, I wouldn't pull all these butterflies off, because if I pull all these butterflies off, I'm put myself in a situation where I have a lot of positive delta, and then I have to try and force myself into these butterflies at no matter what the cost is, right? And that's how I get killed with execution. What I want to do is I just want to gradually roll these butterflies up. So I'll do a couple at a time. Since I'm negative delta, what I'll do first is I'll pull off enough of these to make myself a little bit positive delta. So maybe I'll cut down to, just say, in this case, I'll cut 6 butterflies out of here. Right, so I'll sell off 3 butterflies. So I'll sell off 3 butterflies and I'll go a little bit positive delta. So I just do a bit of a delta shift. I'm not pulling them all off, so I'm not getting killed. That gives me time where I can come in. This is probably a little too positive delta. I should have only done 3. But the concept is there. So now I can come in here and I can buy, say I wanted to roll to 1090s. So I come in here and then I can buy whatever I need here. So I can do 6. So I execute the first order, then I come in and I do the second order. Right, that neutralizes me back to maybe a little bit negative delta now. So now I can sell off a few of the other ones, and I can do that just rolling it over in a process. And that's if I was too negative delta to start. In this case, I'm too positive delta to start. So I can just come in here and I can just buy some of these butterflies. So I can come in here and I can just buy maybe 3 of these. If I'm rolling, 10, 20, I'm rolling 30 points. right? I can do this. I could have actually done 6. So I could have come in here and done 6 of these butterflies, and it doesn't hurt my, right? This is a safe position. I can go overnight this way. It's not going to be problematic for me at all. So, if I did half of them, I could even do half of them. Right? And I can play with execution and do all that stuff. And then I come in here. So now I have a little extra size, but I'm still well within my planned capital limit, right? I have $50,000 planned capital limit here. So I can do that, and then I'll convert that, and I'll go in, and I'll work on getting 6 of these off. Right, which is just going to throw me a little bit positive delta again. Still not a position I'm afraid to go overnight in, not a position I have to panic and buy butterflies with. All right, then I'll come in and I'll buy the other 6 of those up here at 1090. Then I can sell the other 6 of the 1060s or whatever these are, 1070s. Right, so that's basically the concept. And you can do the same thing to the downside. Usually, if the market's down a lot, you're down in here somewhere, you're probably too positive delta. So you come in here, you start by buying some of the butterflies that you're going to roll back to, determine where you're going to roll back to, start buying the butterflies. Buying those butterflies is going to neutralize your delta, and then you can start selling out of some of your upper butterflies and just kind of walk the position back. So that's how you would do that. The second part of this question is, do I do it within the last 30 minutes of the day? And if I only get filled on one order, do I let it sit overnight? So first of all, generally I am in these trades. We're checking at 3:30. A lot of times I do my checks closer to 3 o'clock, and I leave myself a little bit more time to make moves if I have to. But sometimes I do check. I do end up at 3:30 looking at these and making the adjustments late in the day. So I'm never going to leave this overnight in a compromised position. In other words, even this particular trade here, I'm not worried about this position. My Greeks are actually good. Yeah, technically I'm 10 points above the long strike. I should be rolling up, but there's not an issue of staying overnight here. There's no imminent danger of anything happening to me if I stay overnight, which is a good part about these systems in general. They're very, very flexible with what you can do, and you don't have to be right on top of the market 90% of the time. I mean, occasionally the market's doing something really stupid and you have to deal with it, but very, very rarely is any kind of a move in an emergency in one of these. So the good part is I could sit overnight the way that it is. If I wanted to start a roll, if I pulled these 12 butterflies off and tried to sit overnight, that would be foolish, right? But what I could certainly do in here is I can come in and I can start buying. If I'm rolling to 1090, I can start buying my 1090 butterflies. If I buy some of my 1090 butterflies and my delta is relatively flat or maybe a little negative, I'm perfectly fine staying in that overnight if I don't get it done. So the trick is to do it gradually and to make sure between each adjustment that you're relatively neutral delta. And you can, like I said, and in that case you can go overnight, but you don't want to do anything foolish like sell a call off completely or get out of all the butterflies and just hold the call. That's very risky going in a high delta situation overnight. You just don't know what's going to happen there. So that answers that pretty much. And in the same context with the bearish butterfly, yeah, you're going to do the same thing essentially in a bearish butterfly. Usually with a bearish butterfly, if the market's going up, I'm just adding contracts, so that's not a big deal. If I have to actually do a roll, a lot of times I'll sell the butterfly that's hurting first, which is the lowest butterfly, and then I'll buy the other one second, because in that case it's a no-lose situation. If I have 3 butterflies on in a bearish butterfly at 3 different strikes, and I sell the lowest strike and I have to go overnight that way, I'm just in a better position to be more resilient to the upside. And if the market comes down, I'm still in a good position. And if I actually get the roll in, that's better. So if I actually get the other side filled, that's my objective, but I don't necessarily have to. As far as entering an M3, We're going to fight for price on the butterflies. We're going to pay whatever we have to pay for in the call. The reality is, in M3 trade, you're going to enter butterflies. You're going to get the best pricing when the market's screaming up on the butterflies. When the market's screaming up, you're going to have to pay too much for the calls. So I'll do the butterflies and then the calls in the same way walking out. But I mean, basically the concept is you walk out of your position as flat as delta as possible. If I'm doing 100 or 200 or 300 butterflies, sometimes we do 400, I'm not going to buy 400 butterflies and then buy 40 calls. I'm going to buy 40 or 50 butterflies and buy 4 calls, and 40 or 50 butterflies and buy 4 calls. I'll walk it in so my delta is relatively flat, and the same way on the way out. Of course, you may have a very complex position coming out, in which case, again, that's going to be too challenging to go over in just a weekly update. You'll have to get into the forums or the group coaching sessions to deal with that type of thing. So, but essentially, the idea is stay as flat as delta as possible going in, stay as flat as delta as possible coming out, and that way you keep safe, and you can usually go overnight if there's an issue. And also, there are specific ways to exit a bearish butterfly. Again, that's extensive. It takes a while to actually show you how to do that. So that's, again, something else that we'll have to do. But the idea is you don't have to sell a bearish butterfly in butterflies. Keep an open mind. You can sell, if you're in the center of a triple butterfly, you can sell the outer condor first. You can sell the middle butterfly. You can sell the middle butterfly first, then you can sell a condor, and then you can sell another condor and come out of them completely flat without taking on any delta risk. So as long as you keep your mind open, then you can do that. And again, that's more advanced than what we teach here. But as a beginner, you just do the best you can. You take butterflies off in the order that reduces your delta, whatever that happens to be, and that's going to depend on how you're positioned. All right, so you like my simple bull concept? Yes, the simple bull trade is very, very effective trade. It works very well over long periods of time. And they like the bull versus bear concept, so they're wondering if they want to do a bull versus bear every month. That's fine. I mean, a bull versus bear trade is very much like it reacts very much like an iron condor, except it's typically less likely to draw down as much as like a condor might, and sometimes it'll make more money. But it's very similar to what a condor does. It's just it approaches the market a little bit differently in a safer manner. So that's in the SSS trading system. So, I mean, you could certainly do that. But this person's asking me, well, what if we do a bull trade with a regular bearish butterfly? Yeah, I mean, if you back trade them both, then that's fine. The ultimate thing, though, here is what you're doing is you're starting a new trading system, and whenever you modify anything, you can get very, very drastic changes in the way the system works. Now, if you're doing a bull trade and a bearish butterfly and you're keeping everything completely separate and you've done your back trading, then you'll know exactly how that comes out. If you're going to do something different or combine the positions or whatever, and I think this is great, by the way, because I highly encourage people coming in, taking the systems I have and adapting them to the way they trade. I've had a lot of traders come in, they learn an M3 trade, and they say, well, I like to do this a little bit better. And that trade is so darn adaptive, you can do about anything with it, right? So, we have all kinds of weird trade names that come out of an M3 system. So really, really cool. And I also have bearish butterfly traders who've modified the bearish butterfly and have been made hundreds of percent over the last 4 or 5 years. So lots of things that you can do, and I love it when people take our systems here and they adapt them to their style, or maybe timing them to the market, and they're all very, very effective that way. So I really love that. But when you do that, you shouldn't just go out there and do that with live money. You should go out and you should take your concept and go back and do the stuff that I do. You go back since till you had data 2005, and you back trade it every single month and see how it does. It's very time consuming, but in reality, that's the only way you're going to have confidence in it. That's the only way you're going to become a great trader. It's not by taking what somebody else does and just hoping it works. It's by taking what somebody else shows you, going back and testing it extensively, and possibly even making your own moves with it or changes to it, and then trading it to your style. So that's what I certainly recommend with that stuff. So that handles most of the questions there. I hope everybody had a great update. Again, I apologize for not having the live version of this up here, but hey, sometimes we forget to hit the record button, and that's the way it goes. Oh, before I go, I forgot to mention, I am going to be on Capital Discussions Wednesday night at 4:30, so make sure you see that. We'll probably send out an email for that. All right, have a great week, everybody.